Hey guys, it's your tax BFF here, and we are here with another free 5-minute financial fix on a Friday. Today, we're going to get into some of those tax myths. You are listening to everybody online, but I'm going to clear things up for you. Like, comment, and subscribe if you fall victim to any of these myths. So I'm going to give you my top 10 tax myths, okay? These are the things that everybody thinks they know, they take advantage of, but they are completely false. Number one, meals and entertainment. We've been hearing it for years, and we think that we can write off anything that we do. We're writing off our season tickets. We're writing off every restaurant visit. We're writing off, going and taking our team to a party. Now, we have to separate those things out. You can write off meals. In this year, 2023, we're going back to the 50% rule instead of that 100% deductible expense that we've had for the last 2 years. But entertainment has been cut out since the 2017 Tax Cuts and Jobs Act. 2, you're traveling for work, you're writing it all off, but you are saying that your saving grace is that you're traveling to work remotely. Is that ordinary and necessary? Do you have to be in Florida or somewhere tropical in order to work remotely? No. So stop it. Make sure that you're intentional about having some real business in that area prior to booking that flight. 3, not reporting income under a certain amount. Oh, I only made a couple dollars. I didn't really make enough to file my taxes on that. Or I didn't really make enough with that business to actually have a business return. Presume all income is taxable, okay? And self-employed income, anything over $400, the IRS wants their pick. Where my money? So stop saying I only made a couple dollars, unless you're actually talking about $2. Number 4, tax extensions. We're in July, so I need to make sure that we tell you this. Yes, you can be granted an automatic six-month extension through October to file your taxes. And this will allow you to avoid the late filing penalty. However, this is not an extension on the amount of taxes that you owe. Meaning April 15th, at that deadline, that next day is when the interest will start to accrue on any taxes that you owe. So if you submit your return in October and you say you owe $2,000, just know April through October's interest will be added to your bill. 5, filing taxes or paying quarterly taxes is voluntary, right? Number 1, everybody got filing taxes. Just go ahead, get that out your head. If you have income, especially over $13,000 and $400 is self-employed income, you got to file a tax return. And if you are going to generate a tax bill of more than $1,000, you are required to pay estimated taxes. 6, illegal activity is not taxable. And this is my favorite one because a lot of people are trying to qualify for homes or cars and they have the money in their accounts, right? They can show this money, but they want a tax return. And they say, well, with my legal money, with my rental properties, I only made this much, but I actually, gambled or did whatever else, drunk money, I don't know, over here, and, I can't really put that on my taxes. Well, you silly characters. Yeah, you don't want to say, so drugs illegally on my taxes. I don't even know what you categorize that as. However, that income, that is a service-based or a product-based business that you need to be paying taxes on. If you have cash flows coming into that bank account, just know that the IRS can have their hand in it. I think we're on 7. Home office deduction or work vehicle deduction is an automatic audit. Who told you that? No. If you have a designated area in your home that you are using for work purposes only, that is a home office. Now you got either the simplified method, or you could actually take a percentage of all of your bills based on the percentage of the square footage of your home for that office towards the whole home. Why are we not taking this deduction anymore? Whatever. 8, students or dependents don't have to pay taxes or don't have to file their taxes. Absolutely not true. Again, going to that threshold. If you're making, and I'm just giving you just the roundabout number just so that you know when you're getting close to that amount, making over $13,000, you got to file some taxes. 9, don't make enough money to get audited. This is my favorite. Well, just write off everything because I ain't really making enough money. They ain't looking at my little return. Well, here's a fact. People who make less than $100,000 are getting audited twice as much as those that make above. We've talked about that in my audit series, but just know, file those taxes, file them properly, make sure that your deductions are ordinary and necessary. And number 10, my accountant is liable for the mistakes. I love this one because this is one of the most important reasons that you must trust your accountant. You must work with them. You need to look over all of your paperwork. Any exchange between your accountant and you are like law documents. You're looking at that tax return. When you review and sign it, you're saying, this looks good. I want to submit this. So make sure that you're going over your return with your accountant and you're making sure that everything adds up to what it needs to be. Because in the event of an audit, or if they find mistakes on your return, you will be the one that owe, not your accountant. I hope you enjoyed today's Tax Myths, and I look forward to seeing you guys next Friday. Like, comment, and subscribe for more.